Hello everyone, Sam is here from myforexmagicwave.com. Just making this video about the Euro Aussie and the setup, the trade setup, the harmonic pattern or Elliott wave, whatever you can call it. They're both the same thing. But so let's get started. So I just want to show you that if they do work, and they are reliable, and they do work. And but the thing is that anyone wants to trade need to learn properly. So I just want to show you that couple of instances. For example, this is the chart in front of you. So Euro Aussie, the first chart I made on the 6th April, right? It's my Elliott wave count, as well as it's like wave 5 ending here, A, B, C correction. But here I see it. Okay, this is the harmonic pattern building. Now, conventional way is to trade this pattern or these harmonic patterns, any one of them, once they are finished at finishing point at point D, right? They all have 5 points, X, A, B, C, D. So once the pattern is finished at point D, you're supposed to trade. But I came up with the idea a long time ago, several years now, and then I'm trading this way, and it's very lucrative. And what it is that if we can pinpoint, once you pinpoint the point C, that this is what it is, then you can start trading, because especially the harmonic pattern called butterfly or wave C in Elliott wave, it's a big one. And you don't want to miss all those, amount of pippage. It's a lot of them, hundreds of pips to make, especially like a 4-hour chart or above. My 40-minute chart here, the Renko charts, 40-minute chart, is as equal to like regular Japanese stick candlestick, right? 4-hour chart. All right. So if you have that, and if you have a pattern there, usually it will end up, giving you a couple of hundred or more pippage. So this is the idea. So I study a lot, and then I figured out that, okay, this thing, something dropped in my room. I don't know what the heck. All right. So point C, more and more I study, and I found out that the point C usually makes the turn from the line, 23% line of the same fib. When you draw first fib from X to A, then for butterfly pattern, point B has to be at 78%, and then point C, sometimes 38% or sometimes 23% line. It turns, it makes the turn. So for example, here it came here, and then it started wobbling here, and then I have a reversal candle, my reversal candle, and then a blue candle. Says, okay, it might be turning. And then usually from 40-minute chart, I immediately go to my 7-minute chart and find the entry there, early entry, and I take it. And that becomes very lucrative. And then start going up, and then it's gonna be putting like 5 small waves, which called Elliott wave, right? Like this one, 1, 2, 3, 4, 5. That's correction. That's an impulse wave. Then ABC, big one. Then ABC. So that happens, right? A, B, C, and then supposed to have 5 waves here as well. So anyway, we're not talking about the Elliott wave here. We're just looking at this harmonic pattern called butterfly. They are same thing, but this is what it is. So X, A, B, C, and then I was saying, okay, we're gonna go from here to here. So what happened to this chart? It went there. This is my first trade, which is from 7-minute chart, and then this is the entry from the 7-minute chart. Went up and came down, right? And then it bounced from the 20-minute setup, and then 110 pip there, and then finish here, waited for the retracement, and then this is the setup for wave 5, and mixing Elliott wave, harmonic pattern, everything together, right? So, and then this one went up for 75 pip. But this is just recently, last week. Now let me show you the same thing, exactly the same thing happened 2 years ago, and completely different pair. It's not that only this, 2 years ago, only one pair, but what I'm saying is that we're trying to show is that this happens all the time in every single pair. We just have to find it. So I'm just showing you that all the way back, the one on like 2 years ago. But if you pay attention, you will find exactly the same thing. This is X, A, B, C, and then you see C point bouncing from 23% line. And I had it, okay, they're probably going to go here. It's 127% point D. And look at that, what happened? This is what my first entry went up, then it started to come down. Then again, this is the second trade, start to go up. And that's what it is. And then you can see that close, right? And then slowly going up. That's my third trade. So this is like 1, 2, 3, 4, we have 5. It's going to be 5/5 to the upside. And the target is this point D. But notice that, I started from point C, not from D. From D, you're supposed to go short at the finishing. This is a bearish butterfly pattern, right? So it's a bearish butterfly means from point D, you're supposed to go short, but I'm going long. But from point C, that's the beauty of it. If you understand this, and that was my third trade, going to the upside, right? And finally we went there, and not only that, it's like very close to the target, right? So that's where I closed this trade, this one. And again, like I said, that if I try to find all these previous, I'll show you a few every single week. And all you need is just one of these setup, and you're done for the whole week. Why? Let me show you what happened last week. After this one, the final chart was this. See, we went there very close that, and then start dropping, right? But I made another chart saying that it is not going down. This is the thing that, if you know everything, a little bit of this, a little bit of that, then you can save it. So a lot of people say, yeah, it's a harmonic pattern probably, it's very close to point D, and then let me go short. But it's not coming down, because see this chart that I made, and I said that it might be going for this. Instead of 127 level, it might be going to all the way to 161%, which is a bigger butterfly pattern. The butterfly pattern can be finishing at 127 or 161. So the reason is that, all the, fundies and data and the euro condition and the Aussie index, when you look at all of these things, then you can realize that, okay, the chances of this pair to go down is not pretty. It might go up. So let's take a look at the current chart right now. You can see this is what it is. It's 32.42. And this is Aussie index, by the way. Sorry. So I'm watching it, and I need to we need to break this level, and as soon as this level breaks, if it breaks, then Euro Aussie will fly. This is how the Euro Aussie index is like. See, so it's coming down. It's supposed to come down from 78. So Aussie may be getting weaker, and then but let's go and take a look at the live chart of Euro Aussie. And where the heck did that chart go? Oh, I already showed you, right? This one? Okay. So let me go here. Okay. Is this? No, this is not the chart. Hold on just a minute. Okay, this is what it is. So now you can see here, this is a 40-minute chart. This is what it is. And it's supposed to continue to go to the upside, right? It's like 1, 2, 3, 4, 5, and then this is the area that it start to come down. But you notice that since then it start to go up a little bit, right? And then it's wobbling here. We had just had a news from Aussie first, and then China, right? China news affects the Aussie dollar pretty much, and they both came out a little worse than expected. Bad news, right? And bad news is Aussie negative, and Aussie gets weaker. Aussie is on the right hand side, Euro Aussie. Right, and then this pair is supposed to go up, and it is trying to go up. And my target is, like I said, that it is a 40-minute chart of that other 1.618 would be 57.68. Okay, now the challenge is that are we gonna go there? Maybe, maybe not, right? So first, that we never touch this 127 level at least, right? So for today's, today's target is from now. I have a long going on right now. and hopefully we will go and hit 56.82. Then it's probably going to dip a little bit, right? Or maybe back to 56.54, and then we might bounce and then go towards 57.21 and then 57.68. That would be ultimate target. So let's see what happens. But this is how these patterns and Elliott wave. I mean, like I said, that this is the correction and Elliott wave, and it's very reliable. Just a matter of learning. That's it. If you can get into it and learn Elliott waves or money patterns, you can do the same. And I have tons of it. In my website, you can go and, before and after chart area, you'll see how many money patterns and Elliott wave that I made. And then, even, for example, this one, you see this one here? That's the calculation for the, 1, 2, 3, 4. This is Elliott wave calculation. And I was waiting for my trigger candle to show up, like one blue candle, and then open the trade. Right? And then you can see right there. Actually, what happened is that there was a 7-minute entry I did, and then went up. I closed that one, and then from here got in again. So once you learn, you can do a lot of mumbo jumbo, right? But basic bottom line is that this is how Elliott wave and harmonic patterns work, and especially my harmonic pattern trading is from the 23% line, not from where the pattern is finished. Yeah, I mean I'll trade that as well. But why waste all those pippage from 23% line or point C to point D? It's a lot of. I had in between, okay, 75 pip here, 110, and 65. So that total is 250 from one pair and one setup. And it just did exactly the same thing as this pair back in 2019. And it's a lot of other things that if you can pinpoint, if you draw the fib like that, and you see that this is a 78% pullback. If this pullback is 61%, and then you're bouncing from 23% line, then it might go only to 78% to finish up a Gertley pattern, and then reverse from there. So different conditions for different patterns and all that. But yeah, this is how it works. So just wanted to share with you guys that this is how it is, and you need to get in and learn. So this is it for now. Thanks for watching, and have a wonderful day.